friends. Today I have an update with regards to a company called Kaynes Technology India Limited. This is a semiconductor stock. The company has, the company stock has gone high today after 1,600 worth QIP was purchased by multiple mutual funds, including HSBC, Motilal Oswal, and Nomura. There were shares that were bought by ICICI Prudential, HSBC as well. So total worth 1,600 crores. During Wednesday's trading session, shares of leading end-to-end IoT solutions enabled in triggered electronics manufacturer are in focus on the exchange after successful raising of 1,600 crores through QIP. Kaynes Technology India Limited hit an upper circuit of 5,881, up by 1.5%. According to the latest filings, the fundraising committee of Kaynes Technology India Limited has officially closed its QIP, raising 1,600 crores, opened on 19th of June, closed on 24th of June. The company offered the QIP at 1% discount than the floor price of 5,625 per share. The key investors who were allotted more than 5% of the equity shares under the QIP were Motilal Oswal, HSBC Mutual Fund, Nomura Funds, Kotak Mahindra AMC, Nippon Life India, Axis Mutual Fund, ICICI Prudential Life Insurance, HDFC Mutual Fund, HDFC Life Insurance Company. As of FY25, the company has a consolidated order book of 6,597 crores as against 4,115 crores reported in FY24. Kaynes Technology India Limited is the leading end-to-end and IoT solutions provider, enabling electronics manufacturing players with capabilities across the entire spectrum of electronics system and design manufacturing companies. The company provides conceptual design, process engineering, integrated manufacturing, and life cycle support for major players in the automotive, industrial, aerospace and defense, outer space, nuclear, medical, railways, IoT, information technology, and other segments. The total capital expenditure planned for the semiconductor business is approximately 3,400 crores, while around 1,400 crores is allocated for printed circuit board segment. So we'll quickly go through a disclaimer and then we'll update some important information in regards to the financials. Uh, okay, so Avalon Technologies Limited. This is basically the different entities purchase stake in the block deal of the company. This is regarding Avalon. Sorry, it's another company. So important disclaimer is the article come information has been extracted from different resources on the internet. All investment opinions and recommendations mentioned are solely those of the respective broking houses, rating agencies, and experts. The views do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. Okay, this is the logo of the company. This is the current price of the stock, 5,850. Over the last 5 days, the stock has added 2% value. In the last 1 month, a negative of 2%. In the last 6 months, a negative of 17%, and overall a 45% return in the last 1 year, which is an amazing performance by the company. Incorporated in 2008. I think we've just gone through this information. Market cap of 37,500 crores, high of 7,825. Current price of 5,850, price to earnings ratio of 128. Book value is 444. That means the company is trading at 13 times its book value. Return on capital employed is 14%, return on equity is 11%, face value 10 rupees. Good profit growth, CAGR of 96% in the last 5 years. Stock is trading at 13 times as suggested, reporting profits but not paying dividend. Company has low return on equity of 11.5% in the last 3 years. These are the peer comparisons. Kaynes Tech, Honeywell Auto, Jyoti, CNC Auto, LMW, Tega Industries, Smyra, SGS Tech, Raj Industries. So you can see price to earnings ratio of the company's minimum of 46 and a high of 127. Oh, sorry, high of 207 rather, which is very high indeed. You can see sales in the last quarter grown by more than 50%, almost 50%, which is a good sign. Net profit has almost increased by 90%. Yeah. So again, that is a good sign. Sorry, it's not 90%, 66. It's almost 70%. Yeah. You can see sales in the last 1 year they've grown by 50% revenue growth, and profit has grown by about 55, almost 60%. That's good. You can see profit growth here for the last 12 months is 62%, sales growth is 51%, stock price growth of 45%, and the return on equity in the last 3 years has been consistent at 11%. Reserves have grown by about 350 crores, which is a good sign. Borrowings have drastically grown. Compared to that, the company has uh, increased its revenue, and also there has been an increase in the net profit. So uh, the higher cost of borrowings with higher interest payments has been offset by the higher net profit compared to the capital employed. So it's a good management of the borrowings, as long as the company is able to generate uh, more value for the shareholders and the business. The borrowing is good. However, a very high amount of borrowing is also not very good for the long period of time. So the company needs to, keep their borrowings in check and control the unwanted interest payments as far as possible. Debtor days remain almost the same. Inventory days remain almost the same. Days payable have gone up by about 30%. Cash conversion cycle has reduced by about 18%. Working capital days have also reduced by about 18%, which is a good sign. Return on capital employed has come down, probably because of the higher borrowing cost, which could have impacted the overall returns on the amount invested by the company. So you can see promoter holding is 58%, public holding is 14%, FIIs hold 11%, and direct institutional investors 17%. So the public holding has gone up by about almost 3% in the last 6 months, which is pushing the company towards a high risk of volatility in terms of price and in volume as well. The higher the amount of public holding, anything above 10%, is going to put a lot of strain on the price and the volumes that would be traded on the exchange. So it's important that uh, there is a substantial hold of FIs and DIs apart from the uh, promoters, which will keep the stock holding in good and safe hands. So something again, the sale of FIs, which has been about 3.6% in the last 6 months, has been the reason why the public holding has increased, and that could easily create a sense of negativeness in the market because the shares in the stock exchanges will be very susceptible to any negative news and would increase the chances of high uh, volume turnover, and that will indirectly impact the price and overall well-being of the company. So friends, thank you for watching. Wish you a happy week ahead. We'll connect with another video tomorrow. Please share your valuable feedback in terms of improving the content and the presentation of this video. We'll connect with another video very soon. Thank you. Good night.